Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. This year's VRIC is in the books. Keep your eye on this channel for all of the keynotes, the panels, and presentations. But of course, we are bringing the VRIC to you and will continue to do so all year with our series of expert online panels. And I'm very excited today to be joined by Adrian Day, founder of Adrian Day Asset Management, and Florian Grummes, founder of Midas Touch Consulting. We're going to be discussing the state of the gold and silver markets. Gentlemen, welcome to the show.
Thank you.
Thanks for having me. Pleasure to meet you both.
Yes, pleasure to have you both on the show. And I want to start the conversation off with silver, a metal with extremely low sentiment at the moment. Florian, you recently published an article on silver where you wrote, after a 6-week pullback, silver is currently attempting a stabilization and recovery. However, without a clear new uptrend in the gold market, this endeavor remains challenging. While stock markets enthusiastically move from one high to the next, precious metals investors are currently disappointed. I think that sums it up very well. Disappointed may be an understatement. I get all sorts of hate whenever I even bring up silver in the comments section. We keep hearing forecasts that investors just need to be patient and keep holding, and eventually they'll be rewarded. But as a lot of people point out, the last time silver really took off was the end of 2010 and into 2011. How long do investors have to hold on here, in your view? Florian, I'll throw this to you.
Well, obviously, I don't have a crystal ball, and I don't have no clue how long you really have to be patient. But we know from the past that it takes most often much longer than anybody anticipates, and then it goes much faster than anybody could imagine. So the first time that we've seen silver really exploding was in the 70s, in the late 70s. It had been trading, I think, between $4 and $5, roughly speaking, for 4 years. And then suddenly, 1978 in October, it started and run up 10x in 1.5 years to top out at $50 in January 1980. And that's still the all-time high. So just from that perspective, obviously, silver seems to be very undervalued and a great opportunity at $23. But then you are playing the very long wave, right? So as you mentioned, 2010 was the last time we've seen silver doing its own thing, basically having a life on its own. And it ran up from $17 up to $50 in, I think, 8 months. But that also marked the top in this 10-year bull market between 2001 and 2011, where gold had been marching ahead for most of the time. And only in the last, let's say, 1 year, silver really showed up to the party and did its own thing. And I assume that we will see something similar again in the future. So when it's all done, this bull market that I assume we are in the precious metals, and we will look back, we will most likely figure out that silver did outperform gold. However, it most likely then also will have done it in the last, let's say, quarter, the last fifth of a bull market. So we need to see gold marching higher first, and then you will have the typical behavior that people start figuring out, okay, what's cheap, what has been lagging, where can I redeploy my money? And then they will figure out, wow, silver is really lagging here. And then suddenly you see a lot of investment money coming into a very small and tiny sector. And I don't think that we are there anytime soon. So my guess is it will take a few years.
Right. Adrian, your thoughts. Where do you concur? Is there any areas you differ on, Florian, when it comes to the silver market? And could this extremely low sentiment be a bullish signal?
Well, I actually agree with absolutely everything Florian said, which, I prefer to disagree with somebody. It's more interesting. But I agree with everything he said. I'll just emphasize a couple of things, if I may. He mentioned at the beginning about it's flat for a while and then you have these sharp moves. And of course, that's why it's important, in my view, for investors in gold and silver stocks, why it's important to be positioned. Because, all too often the start of the moves can be very rapid. And if you're out of the market and you're waiting, I've seen this over and over again. You tend to wait for a pullback that maybe doesn't come in the early stage. So, Florian mentioned, silver tripling in the 70s. And you look at the gold stocks, and we'll come to gold later, but it's the same for the gold and silver stocks. They don't just go up 5 or 10 or 15%. They will quadruple and quintuple and more. And so I think you need to be positioned and you need to have patience. I do agree, of course, that silver, if history's a guide, is much more likely to move, to use the American analogy, is it the 8th or 9th inning? I'm not quite sure. I don't watch baseball.
9th inning, yeah.
I think that's what it is. I could use a cricket analogy, but I don't think anyone. So it's much more likely to move later. So I think you want to be positioned in gold. I assume everyone's already positioned in gold. Gold first, gold stocks second, silver stocks, and silver is typically the last to move.
And let's touch on.
Yeah, sorry.
Go ahead. Yeah.
I was just going to say, when it moves, then the moves are very, very dramatic.
Right. And let's touch on the silver mining space at the moment. Another area that is seen as either very undervalued or just a terrible place to put capital, depending on whom you talk to. Do you see any opportunity in the silver mining space at present? Obviously, when it comes to pure play silver miners, there's far less projects out there than gold, for example. Adrian, I'll start with you on this. Are you currently invested in the silver mining space, or do you think this is a time to be sitting on the sideline and waiting, as you said, for gold to perform first?
No, I think it's an excellent time to be investing in the silver stocks. Let me make a couple of points. If you look over the last 12 months, for example, gold has outperformed. Silver is second. The gold stocks have lagged both gold and silver for the last year, and the silver stocks are worst of all. But let me make a point. A lot of us, as we know, a lot of the silver stocks, but we think of as silver stocks, are not really silver stocks. You mentioned how far fewer pure silver companies there are. So you look at companies like Pan American Silver. What's that? 35% silver or 30% silver, whereas a majority is gold. And after they bought a Yamana, even a higher percentage comes from gold. You look at Fortuna Silver. They are at about, the projection for next year is about 20% silver. And again, their percentage of silver went down after they acquired Roxgold West African mines. So even companies that have silver in a name and that, an ordinary retail investor thinks of as silver are not really silver companies. And so we don't have to wait for the silver price to move before some of those silver companies will begin to move. And the two I mentioned, I don't know if you want specific, but the two I mentioned, they're both among larger silver companies, I think are both very, very inexpensive right now.
And Florian, your thoughts on the silver mining space at present? Do you see any opportunity there?
I think there is certainly opportunity in that tiny sector. I agree with Adrian. You need to have somehow a core position because once the market starts to move, it's very hard to get on that train that basically then very quickly is leaving the station, right? And you don't want to be running behind the train. However, I also personally love to be at times out of the market. I think that's also something that I see among many people that I work with and that follow my work, that this constantly being invested in the mining stocks can also drain on your energy and your psychology. And I think given the fact that gold has been breaking out above 2,000, we had a monthly close above $2,000, and so far it's been holding above that round psychological number. And the sector seems to warming up somehow. I mean, the fundamental reasons are on the table, no doubt about. And so generally speaking, yes, I think it's important that investors have a plan to cost average on those stocks. So most of the time I see that once people understand I need to have gold and silver because we are in a paper money Ponzi scheme kind of system, and then they start going down the rabbit hole, then they quickly like over allocate, and then they realize like, wow, I can have even leverage with the mining stocks, and then they quickly allocate way too much money. And unfortunately, this is a tiny sector. And even though there might not be even bad news from the company, the stock could still go down another 20, 30, 40% without anything happening on the fundamental front from the company. They might even release good drill results or good news. And still the sector has no liquidity coming in. And then you see these stocks sliding lower. And even 50% is nothing in the mining stocks. So you have to be careful. You have to have a long-term plan. If you really want to build a long-term portfolio in mining stocks, you need to always have enough liquidity on the sideline to be able to cost average down, to be able to take advantage when prices are going lower than anybody can imagine, actually. But generally speaking, I think the silver mining stock sector is undervalued. It's basically neglected. You have now seen what can happen in uranium in a few years, how the sector has completely changed, and I can definitely imagine something similar for the silver stocks. However, I think it still needs a bit more time that there's really coming more momentum into it.
Well, let's turn to gold now. Adrian, you wrote in your 2023 Q4 review, for nearly 2 years, we've been saying that gold will take off when the market believes that the Fed will change course on tightening before inflation is vanquished. We are at that point now. The Fed's pivot comes with the Fed's own preferred inflation measure at 60% above its own target. It is monetary factors, not geopolitical, that will see a sustained move higher in gold. Now that we're a month into 2024 with gold seeming to remain around the $2,000 to $2,050 range, what are your thoughts on its trajectory this year?
Well, of course, I wrote those words before Powell's last press conference yesterday. To me, it was remarkable. He was remarkably dovish in December, unnecessarily dovish. In other words, he had questions from reporters where he had the opportunity to push back a little bit against the sentiment getting too extreme, and he didn't do it. But yesterday, he did quite the opposite. So I think my sense is that the market, I mean, I still hold to the fact that when the market believes that the Fed will start cutting rates before inflation is firmly under control, permanently under control, that's when gold will take off. But, you know, I think it's still an open question as to when they will start cutting rates. And Powell himself knows that you don't cut and then immediately go back to raising. So once they embark on cutting rates, it may be slow, it may be rapid, but we're going to have a series of rate cuts before they stop. So I think Powell is cautious about embarking on that process. And I get the sense that Powell himself is probably a little bit more cautious, shall we say? I won't say hawkish, but more cautious than the rest of the Federal Reserve Board. So, you know, we may or may not get a rate cut in March, but I think we'll definitely get one at the meeting after that, which is May. We'll get one in the first half. And inflation, in my view, will not be firmly under control. Obviously, the CPI and CPI numbers have come down significantly, but again, they're still meaningfully above the Fed's own target. And you've had some good, for the last 3 or 4 months, you've had some good year-on-year comparisons. We're now moving in, come March, April, May, we're moving into a period when those year-on-year comparisons are going to be a little bit more difficult. And so we could have a period of what I call stubborn inflation. I'm not looking for inflation to sort of skyrocket, but if inflation stays at the 2.5%, 3%, and even moves back up to 3.5%, you know, that is, again, meaningfully above the Fed's target. And if they start cutting at that point, that's when gold will really take off, in my view.
And your thoughts, Florian? Yeah.
Sorry.
Right. Yeah. And your thoughts on the gold market, Florian, do you also think it is monetary factors, not geopolitical, that will push the gold price higher?
I think it's both. And I think the strength that we're seeing right now, besides technical reasons, is most likely also geopolitically driven. And I see that, I mean, every night in the Asian trading sessions, you basically see gold going higher. And then once the paper markets in the Western world open up, they somehow manage to trim it down again, or at least create enough volatility to spook the traders and the investors. Um, I think there is quite a few drivers, but obviously the main driver is the monetary one. And nobody knows exactly over the course of this year how it will play out, but I think they are in a corner. They basically cornered themselves. And now with the problems in the Red Sea, for example, you have renewed inflationary pressures because of the supply chain issues. The cargo ships take much longer to Rotterdam, and then also to other harbors, and going back the route to Asia. So the transportation costs, the insurances, everything has been going up. You also have now for example, I can speak especially for Germany. I mean, the labor cost is simply rising. They're demanding higher salaries, obviously, for a good reason. And this is all inflationary. You have this inflationary mindset out of the box, so to speak, right? And that's something that is very hard to get back into the box. Basically impossible at this situation where we are right now. And I think that gold is obviously the smart money. It's kind of like sniffing out all these things. And I think it will be a violent mix of geopolitical reasons, monetary reasons, and also, I mean, don't forget the Chinese will have to print, and have started already, because they also are in a very dire situation. So and the Chinese people have learned that real estate is not safe anymore, and where can they put their money, right? And so I think the physical demand out of Asia is also a big driver. And technically speaking, I mentioned it before already, gold is currently holding above $2,000. This false breakout in December obviously had a questionable taste back then, when finally it broke out above this 2075 resistance, and then within 1 hour it rushed higher to 2150, only to come back down and create a big reversal, which spooked again everybody who's looking at charts especially. And but now here we are trading around 2050. Any pullback is being bought. It's crazy intraday volatility, and in the end of the day, nothing really happened. I see strengths in the gold market. I think we are in a seasonal favorable time at the moment, until usually end of February, maybe early mid of March. And yeah, looking forward into the year, I mean, it's an election year. You might assume that the powers in play are interested in having a rather smooth ride throughout the year. They certainly don't want to see the markets crashing. However, remembering 2008 was also an election year, so we will have to see how it all plays out. In the last few days, we've seen stress in the banking system reappearing again, with the New York Community Bank Corp down, I think, 40%. We have to see. I mean, they can come out. That's what we learned last year. Over one weekend, basically, they changed 180 degrees and printed $400 billion base money, which was a big stimulus. And something like this can happen very quickly again. I think the market is driving Powell. The interest rates had been falling since end of October, and then he came out with his super dovish statement in December. And now he tried to basically calm down things a little bit. The market reacted immediately. But basically the market is already expecting lower interest rates, and I don't think that he has a lot of chances to do any other thing than that.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
And if we're discussing gold stocks at the moment, looking out across that sector, there's obviously a larger variety of companies than when we look at silver miners. Are you seeing opportunity there at the moment? And when it comes to your own investment strategy for the sector, do you tend to look at explorers, developers, producers, ETFs, royalties? Where are you seeing the most value there at present? And Florian, I'll start with you.
My focus has been like the big blue chip dividend paying mining stocks like BHP Billiton and Rio Tinto and a few others, simply because I wanted to have a cash flow. I wanted to have low risk, but wanted to be invested in the space. And because I thought it's not the time to really go down the ladder and play the more riskier, more speculative stocks. However, I think that will change at some point. Right now, I'm still a little bit hesitating. I have some positions that I'm building, but I'm definitely not over allocated at the moment. I'm more focused on gold itself. But that will certainly change over the course of the next, let's say, 5 to 12 months. Yeah, I think generally speaking, the gold mining stocks are crazy undervalued. I mean, gold is at new all-time highs, and if you compared where the GDX and GDXJ have been back at the all-time high from 2011 and where they are trading now, I mean, it's crazy how much they're lagging, and they will catch up at some point violently, and you need to be invested for that case because it can happen theoretically at any time. But my guess is it will take a little bit longer. The mainstream money is certainly not coming into the precious metal sector at the moment. It most likely will take more time. And when you ask me about my strategy about evaluating the companies, the smaller ones especially, management is key in my opinion. That's the most important part of it. You need to see people that have a track record of being successful, because building a mining company is very, very difficult, and the capex needed is so huge, and most of the time the investors are getting simply so crazy diluted over the years. So you need to be really very careful what you're doing. Of course, once we are in a bull run, then you probably can blindly pick whatever stock and they will all go up nicely. But to really have a 10 bagger, you really need to figure out what skills and track record does the management have. And then, of course, it's also a jurisdictional question. I have been mainly focusing on North and South America in the past. There is now much more challenges in Latin America. Many countries are going to nationalize, and that might even continue. You also have more and more, obviously, this China-American conflict, East against West, also now being in South America, with the Chinese also trying to get food there. Similar things have happened in the past in Africa. And since I'm still, I mean, I'm personally a child of this planet, but I'm still somehow belonging to the Western system or world. So we learned this with the sanctions against Russia, that from one day to another, your stocks could be worthless if you are invested in the wrong companies in the wrong jurisdictions. So you have to be very careful there as well. So that's why I'm very hesitating when it comes to Africa, and I'm more and more hesitating also when it comes to Latin America. But obviously, the Canadian mining stocks are the place to go to, and there is like hundreds of stocks you can choose from. And again, management, I think, is the most critical one. You want to look at how many variants, for example, are there, how much, what's the salary of the management. These are things that give you a good idea. And then you also have to be very careful to not fall for all these pump and dump promotion kind of schemes. No?
Very good words of wisdom there. Adrian, I'll turn to you on the gold mining sector. Are you seeing any value there, and where up the risk ladder are you currently seeing the best risk reward opportunities, and the things you look out for, and maybe some red flags as well that investors should be aware of when they're looking at the sector?
That's a huge question, and Florian, any disagreements I have with you are very much at the margin. We're focusing very much on the major companies right now. When you look at gold and silver, the big cap companies are always the first to move. they're not only the first to move, they're also the most certain to move. So that if, for example, I were to buy, I don't particularly like Newmont, but if I bought Newmont, Barrick, Agnico, Franco, Wheaton, Kinross, I can guarantee, I can, as close to guarantee as the SEC will allow me to guarantee, I will guarantee that if gold goes to 2,500, your portfolio of 6 major stocks will do very well. If you buy Consolidated, Moose Pasture, and Amalgamated Ajax, they may or may not do well. So the big cap stocks are the first to move, and they're the most certain to move. And the great thing right now, despite gold having moved up, is that the big cap stocks are just remarkably undervalued. Just to give an example, you look at Barrick, and you can argue about Bristow and Pakistan and everything else, but look at Barrick. They are trading at their lowest price to net asset value in 40 years. You look at you look at Agnico Eagle, which is the third largest gold mining company in the world. Other than the last quarter of 2015 and other than the last quarter of 2023, they are selling at their lowest price to cash flow in their history. Now, I would argue that doesn't make sense because you normally, when price of gold goes up, you normally get multiple expansion. You've got the price of gold over 2,000, firmly over 2,000, I would say, and you've got some pretty robust margins. You know, the oil price, the commodity currencies, which are the main cost inputs, have not gone up as much as the price of gold has, unlike, say, in 2004 to 2008, when the price of oil went up more than the price of gold. So margins didn't really expand. So we've got some good margins. You've got mines with 1,200 and 1,300 all-in sustaining companies with all-in sustaining costs of 1,200 and 1,300. You've got mines with cash costs of 900. Well, you've got some pretty robust margins at that point. So anyway, the point I would make is I would definitely focus and emphasize on the big cap companies to begin with. You know, many of the juniors are also very, very inexpensive. But with the juniors, as I mentioned, with my Amalgamated Ajax, you need to be far, far, far more selective among the juniors. And I would agree, for me, I'm not a geologist or a mining engineer. For me, management is far and away the most important factor. And the second important factor is either a balance sheet, cash flow, or access to capital. Because, you know, companies that are exploring or developing need cash, need capital. And if they don't have a good balance sheet or don't have access to capital, they could have to raise money at the bad time and have dilution. So yeah, I would take strong management, even if they have no cash and a lousy property. I'll take strong management over bad management, even if they have a balance sheet and a good property, because they'll spend the money and they'll screw up the property, if you'll pardon the French. So I go for management number one. And how do you know good management? Well, you know, you mentioned red flags, but the green flags are the opposite of the red flags. Management has done it before, they're successful. Management that has a good reputation in the industry, and that's important because, you know, a bad actor, a reputation gets around in the industry pretty quickly. You want to look at management that is incentivized, that owns some shares, but you don't want management that has, but you don't want a CEO of a company with no revenue but takes an exorbitant salary and keeps awarding himself stock. You want management and directors that actually buy stock and are incentivized. So yeah, I mean, it's sort of, I guess a lot of the things you look for are pretty obvious. You don't want people that overpromise and underperform. You want management that's realistic about, you know, their current cash balance sheet and their needs. So yeah, I mean, a lot of it is sort of obvious, but I think reputation is also very important.
Well, let's end here by stepping outside of the precious metal space for a moment. And I'd like to pose the question, are there any other sectors, whether that be metals, other commodities, or even outside of that, emerging markets, et cetera, that you currently see attractive value proposition in? And Adrian, I'll start with you.
Well, just yeah, quickly, I think some of the other commodities are certainly good, are certainly worth looking at. Florian mentioned some of the big cap miners. I just recently started buying Glencore, 8% dividend yield and single digit PEs. So I think some of the other commodities are certainly worth looking at. The commodity stocks, as you probably know, are trading close to 100-year lows relative to the S&P, relative to the financial stocks. So that in and of itself makes me think, maybe it's worth looking at. Copper is certainly the one that I'm most focused on outside of the precious metals. You know, the thing you have to watch for in a lot of commodities is the global economy. So if you have a slowdown, a severe slowdown in the global economy, particularly if it's China, and I agree with what Florian said about China seems to be turning, but you know, one of the reasons that copper and the other base metals were weak last year, certainly the first 3 quarters of the year, was because of the Chinese economy. So you could have a situation where if China's economy is weak and demand goes down, you could have a situation where, you know, the base metals don't do too well, even if gold and silver do well. So I would focus on the precious metals or the monetary metals, but certainly I like copper. And we're looking at a lot of stuff in the commodity sector. Outside of a commodity sector, there are things that sort of theoretically I like, but we're being very, very cautious, frankly. I think for smaller markets, and not just emerging markets, because the definition of emerging markets gets, you know, to more weirder and wonderful markets, but smaller markets generally tend to do well. Will tend to do well in a stagflationary environment, particularly if the companies and government don't have a lot of US dollar debt, and particularly if you have a scenario where the dollar's going down. So, you know, there's a lot of good quality companies that are inexpensive in Singapore, Hong Kong. There's obviously risks in Hong Kong, but the stocks, by their own metrics, are extraordinarily inexpensive. But I'll be very, very cautious and selective right now, frankly.
And Florian, your thoughts on any areas outside the precious metals where you're currently seeing opportunity?
Yeah, I would agree with Adrian regarding copper. I think that could maybe driven by the new stimulus in China, and maybe have a comeback, so to speak. I would be very cautious with uranium at the moment. I think it's way too much mainstream now. I was very bullish on uranium in March and April of 2020. And it was a really nice run, and it probably was the easy money back then. Now it seems to be rather difficult, and while there are some stocks that haven't moved at all, some have gone up nicely, and the rally might not be over, but I would be rather careful here. I don't think there's a good risk reward at the moment, and it probably will take quite some time to get back to some kind of like fear sentiment, which I'm looking for as a contrarian. I have been, as you know, for many years, very active in the digital asset space. So I was very early with Bitcoin and all the altcoins, and it was a phenomenal ride. But I'm also very skeptical nowadays, and actually have changed my opinion a little bit. I think that the Bitcoin ETFs basically means that Wall Street has embraced Bitcoin. They have figured out they cannot stop the network. Now they're embracing it. And usually you don't see anything featured by Wall Street going up 10x anymore. So you will most likely have now much more ways and tools for them to manipulate the market via derivatives and stuff. Also, not your keys, not your coins. If you buy an ETF, you actually don't hold the real stuff. The Bitcoin, you basically just lend out your money to the banks or the wealth managers. So I think Also from a sentiment perspective, I would say you have to be very careful. I see way too much euphoria and optimism. Normal people, the Johnny come late kind of guys, they all talk about Bitcoin. And I think I have been rather moving away from that sector at the moment. That might change over the course of the year, who knows? But right now, I don't really see anything of interest. I would love to invest in China because I think it's very much beaten down, and you see that now the government, the central bank, starting to stimulate. Market is not yet reacting. After such a brutal bear market, it can take a few months until the market really starts realizing, like, wow, the environment actually has changed, and government and central banks pumping in liquidity. But as I mentioned before, I'm a bit fearful that at some point the situation West against East is going to escalate even further. And then I might not be able to actually sell my stocks anymore and sit on worthless paper. So that's a main issue for me when it comes to China at the moment. I think it most likely is a good contrarian opportunity at the moment. The one thing that I see, but I have to also be honestly saying that I need to do more research because I have never invested in that sector before, could be cannabis. I think it's very much out of favor. Nobody cares about it. It came down, I mean, it's beaten down like unbelievable. The stocks are beaten down. And I see that there might be some changes, legalization changes, regulatory changes coming out of also Germany and some other countries in Europe. And that could maybe bring in a new narrative into the market and create some fantasy. But I still basically are at the beginning of doing my homework here for that sector. I think that's one that is quite out of favor at the moment and on no one's screen. So that looks like a contrarian opportunity.
Fascinating. This has been an amazing conversation. I've learned a ton listening to both of you. I'm sure the audience has as well. Before I do let you go, Adrian, tell us about Adrian Day Asset Management and anywhere else you'd like to direct people online.
Yeah, okay. We manage money for retail clients mostly in global markets and in gold and silver. I also have a newsletter that's a separate business from that. So you can go to adrianday.com and then you flick left if you want money management, flick right, a bit like Tinder, flick right if you want the newsletter.
Great.
So
well, I'll put out. Say that one more time.
adrianday.com.
Great. I'll put a link to that in the description below. And Florian, tell us about Midas Touch Consulting and anywhere else you want to direct people online.
Yeah, my website is called Midas Touch Consulting. You will find our research. It's free, and we focus on precious metals. It's 23 years, and Bitcoin and digital assets since 11 years. And we also feature mining stocks. And people can also join our Telegram channel, which is free. It's kind of a mastermind group of investors from all over the world, exchanging ideas with a focus on precious metals and mining stocks and also the digital asset space. And would love to see people joining us there.
Great. Well, I'll put links to that in the description below as well. Thank you once again, gentlemen, for joining us. It's been an awesome time.
Thank you very much.